Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Tuesday, August the 9th, 2016, and this is the Daily Report for Gold and Silver. We do have a moderate upside move in the precious metals markets, primarily due to a weakening U.S. dollar. Gold currently trading up just over 0.25% at 13.45. This, of course, is December COMEX contract. The low 13.36 on the day and the high 13.48. When we look at spots at 13.38.94, up same net change 0.28 with a low of 13.30 and a high of 13.42. And just to give you an idea of the relationship today between the dollar and the precious metals, specifically gold, take a look at our dollar. Dollar is down 0.26, almost the precise amount that gold is trading up on the day at 96.14. And lastly, let's take a look at silver. Silver is trading higher, although silver is outperforming gold today in that it's not only accounting that 0.25% for a weakening U.S. dollar, but up over 0.5% on the day at 19.84 per ounce. So traders, no doubt we've seen a moderate move to the upside in precious metals today, specifically in gold, now trading up 0.37, almost 0.4%, up about $5 at 13.46 and change. We talked about the fact yesterday that we've identified the beginning of a pattern, a possible pattern, simply called a three-river morning star. It would be these three candles. And I talked about the fact that after a decline in market activity, which we saw this tremendous $25 move down, and then when you get this doji, the doji is really a consolidating candle, and it really tells you that battle between the bulls and the bears that occur daily as this market trades in an open outcry system, neither the bullish faction nor the bearish faction had ultimate control of the market, and that's where you get this doji. In other words, you get a high, you get a low during the day, but the market in essence closes unchanged. It says that neither the bullish or bearish factions were able to dominate the market going into the close or control that new price, which was either lower or higher. That doji is a consolidating doji. And then if you get on the next day a large green candle with a higher high and a higher low, you typically have that three-river morning star. Now, I've put up a actual illustration of the pattern at this point up so you can get an idea of what this looks like in a genuine state, or an example of that, I should say. Now, obviously, you don't have a tremendously large green candle here. One of the reasons for that is when we're comparing it against the $25 down day, of course, a $5 up day is only going to be 1/5 of the amount that market moved down. But nonetheless, it is the type of pattern formation that will trigger a buy signal if we get follow-through buying tomorrow and we get another green candle come in, especially if that green candle, it would necessitate it making a higher high and closing higher, but that would absolutely trigger a buy signal. One other thing about these patterns that we look at, and especially as I talk to you as they begin to unfold, realize this, that as a market comes down, here's our red candle, and we get this doji, it does not mean by any stretch of the imagination that we've hit that V reversal, that we've hit that pivot point in which the market comes down and then begins to track higher. Because you can get a market that's moving down, it has that doji candle, but that's simply a consolidation before moving to lower pricing as you get right in here. Or on the upside, the market moves up, you get a series of dojis, and rather than them spelling the top, it's simply a consolidation moving up. So what I'm trying to say is that just because we see these two candles in this formation certainly doesn't mean that we've got that key pivot point or that key reversal. However, you cannot get that key reversal without first seeing signs similar to what we're seeing now. In other words, if it is going to be a key reversal, this is the type of candlestick patterns we would expect to see from that. So whereas it's not a guarantee that we'll actually issue the buy signal, and I'm really speaking about yesterday, today we're actually getting the kind of follow through I was hoping to get, and so we'll probably issue a buy signal. But what I'm trying to say is it doesn't mean that this is going to guarantee a buy signal coming into the market. It is simply a point to look for certain signs that are going to trigger that buy. Now, the other thing that I like about what we're seeing right now is the fact that these lows, both yesterday as well as today, the low today, 1336, 1335, as you can see, is that 61% retracement. So I like the fact that it has come down. It has tested these lows for a second day in a row, and those lows held, market closed higher. To me, that's an extremely good scenario for the potential for a buy signal being triggered. Traders, stay tuned, because if we get that either later on today or early in tomorrow's trading, or even as we get into tomorrow's trading mid-session, I will send out a special notification, a special trade alert by SMS text message to your phone, as well as an email recommending the initiation of long positions. Now, we'll also recommend a stop, but just to give you an idea of what we're looking at in terms of a stop, we're going to need to keep our stop below whatever the price is when we get in. We have to keep our stop below these lows right in here. That's going to be the key determining factor for our stop should we enter on the long side. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.